Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Big buzzword floating around the financial world these days, NFT, non-fungible tokens. Especially within the last year or two, non-fungible tokens, or NFTs, have boomed in popularity. And whether you agree with the hype or not, it's clear there's an immense amount of money in this new digital asset class. But just like regular cryptocurrency investing, NFT investing isn't something you can hide under the rug from the IRS. In fact, NFT taxes work similarly to cryptocurrency taxes, meaning you need to accurately report your capital gains and activity. If you're wondering how to file taxes for NFTs and how you can track your income, our NFT tax guide is for you. Let's do this thing. Welcome to the College Investor Audio Show, by the way. So glad you're here. First of all, what is an NFT again? All right, so NFTs are unique digital assets that verify ownership of goods using blockchain technology. Usually, NFTs are created as artwork or as collectibles for sports, music, and movie fans. Metaverse games like The Sandbox even let you buy and trade NFTs of virtual real estate with other players. This variety of use cases means NFTs are a versatile technology. But in the eyes of the IRS, NFTs are still kind of a gray area. In fact, the IRS hasn't even announced if it considers NFTs as being property or collectibles. Because of the lack of clarification, it's crucial that investors understand how NFT taxes work and what strategies you can use to avoid overpaying at tax time. So now let's talk about how NFT investors are taxed. NFTs are blockchain-based assets. And since investors typically buy or sell NFTs using cryptocurrencies like Ethereum, this creates a crypto-to-crypto transaction. According to the IRS, this means you have to pay taxes. Here are some common examples of taxable events you can create with NFTs. Selling an NFT for cryptocurrency, trading one NFT for another NFT, purchasing an NFT with cryptocurrency, earning royalties from your NFTs. Buying and selling NFTs are the two events most investors will likely encounter. But generally, if you're earning income from NFTs in some fashion, you are subject to taxes. Purchasing NFTs. Because dealing with NFTs often creates crypto-to-crypto transactions, you have to report any capital gains when you buy or sell NFTs. Here's an example. Let's say you bought a VFriend NFT for 1 ETH. This equals around $3,500 at current market value. However, you actually bought your 1 ETH when it was only worth $1,000. In this event, you owe capital gains tax on your ETH's increase in value. Specifically, you're realizing $2,500 in capital gains because you're exchanging the ETH you bought at $1,000 for your new NFT that is worth $3,500. Time is also an important factor here. This is because capital gains are either short or long-term depending on how long you've held a capital asset before selling. Here's the difference investors should know. Stay with me here. Short-term capital gains. Selling assets that you own for less than 1 year creates a short-term capital gain, which is taxable as ordinary income. Long-term capital gains. Selling assets you own for over 1 year are taxed at either 0%, 15%, or 20%, depending on your filing status and total gains. The IRS outlines long-term capital gain tax rates on its website. Just follow the link at thecollegeinvestor.com. Now let's talk about selling NFTs. The same capital gains logic applies for selling NFTs, of course, as it does with buying this digital asset. When you sell NFTs, you can create capital gains if you sell the NFT for more than you purchased it for. And congratulations, by the way, this is not all bad. So if you end up selling a Bored Ape NFT that you bought for $40,000 worth of ETH for $45,000, that's $5,000 in capital gains. How are NFT creators taxed? If you're a digital creator who sells NFTs, it's also going to be important to consider tax implications just so you're not caught off guard when filing. Luckily, NFT creators currently have somewhat clearer rules than investors. Thank you. The first thing to note is that minting an NFT isn't a taxable event. So, you can create NFTs, hold them, and not worry about having to pay any taxes. However, if you sell NFTs on marketplaces like OpenSea or through a private sale, you got to pay taxes. This is taxable as ordinary income. So, how much you pay depends on your tax rate, which ranges from 10% to 37%. Now let's get a little trickier here. If you're selling NFTs full-time as a digital creator or make some serious cash from your NFTs, according to the IRS, you have to file an income tax return if your net earnings from self-employment are $400 or more. However, this tax rate is 15.3%, which might be more favorable than paying regular income tax on NFT sales. Here's how to report NFTs on your taxes. The IRS currently treats virtual currencies as property. However, the IRS hasn't really clarified anything if it treats NFTs as property or as collectibles. You need to get on that, guys. So if the IRS considers NFTs as property, filing taxes is similar to cryptocurrency taxes. This means you have to report short and long-term capital gains and then just pay taxes depending on your income. However, the IRS has different rules for taxes on collectibles. The main difference is that collectibles like artwork and coins are taxed at 28%, which is a lot higher than long-term capital gains taxes. We have the long-term capital gains tax rates in comparison at thecollegeinvestor.com, where you can see the chart. It's laid out beautifully. You use Form 8949 to report sales and any capital gains and losses on your capital assets to the IRS. The good news is that all short-term gains are taxed as ordinary income, so it doesn't matter if the IRS treats NFTs as property or collectibles under this tax scenario. But if you create a taxable event with assets you've held for 12 months or longer, the difference in classification starts to matter a bit. This frustrating lack of clarification means you have to use your judgment when filing your taxes. That's fun. However, according to the IRS, collectibles include works of art, rugs or antiques, metals or gems, stamps or coins, alcoholic beverages, think wine, any other tangible personal property that the IRS determines is a collectible under IRC Section 408M, which you can look up for yourself. NFTs can be considered art, but they certainly aren't tangible. Plus, some NFTs have additional utility like giving owners voting rights. Ultimately, these factors help assert the case for treating NFTs as property, just like cryptocurrencies, which also means avoiding the 28% collectible tax rate. However, you should still consult a tax professional for questions about filing NFT taxes, especially if you have a significant portfolio. If it's like one or two, you can probably figure it out. Now, let's talk about how to track NFT income for a second. Bookkeeping. That's going to be the most important aspect of filing your NFT taxes. In other words, you gotta track the cost basis of all your digital assets. This means knowing exactly what price you purchased any cryptocurrencies or NFTs at so you can calculate capital gains down the line. The easiest way to track these figures is to use crypto and NFT tax software. Software like Zenledger and Token Tax automatically sync transactions from cryptocurrency exchanges to track the cost basis of your various cryptocurrencies. When you eventually buy an NFT with crypto, this lets you calculate potential capital gains. Plus, crypto tax software automatically creates downloadable tax forms like Form 8949. So helpful! You can also track ordinary income from sources like cryptocurrency mining and staking. Granted, crypto tax software is still kinda catching up on all things DeFi and NFTs. However, More DeFi and NFT tax features are coming, and using tax software really saves time versus manually tracking all your transactions. This is especially true if you use several exchanges like Coinbase and Binance and want to consolidate your transaction data. Okay, hopefully this podcast created more answers than questions, but let's touch on a few FAQs real quick. How does donating NFTs impact taxes? Okay, donations. Cryptocurrency and NFT donations are becoming a lot more popular as both asset classes emerge. In fact, companies like The Giving Block are already in place to help investors donate to nonprofits and charities. But what happens from a tax perspective if you donate NFTs? According to Token Tax, donating an NFT isn't a taxable event. Furthermore, you can leverage NFT donations to offset some gross income if you held the NFT for over 1 year, you donate to a 501c3 organization, you donate your NFT directly to the organization. What NFT income is taxable? Minting an NFT is not a taxable event. However, trading, selling, purchasing, and earning royalties from NFTs do create taxable events. Okay, so here are some final thoughts. A few years ago, the idea of buying ownership of a digital basketball card or piece of virtual land might have been labeled as a bit crazy. But with the recent surge in cryptocurrency and NFTs, it's clear there is a lot of opportunity in this space for investors. However, just like regular stocks and ETF investing, we always have to say this, you need to take bookkeeping and tax filing seriously to avoid penalties. Crypto tax software like Zenledger and Token Tax are a great place to start to stay prepared for tax season. Between robust tax software and keeping an eye on IRS changes, you can successfully invest in digital assets just like you would in other alternative investments. And that is our show for today. I hope it was helpful. If this did create a little bit more, questions and concerns for you, please head to thecollegeinvestor.com and dig a little bit deeper. Copy and paste the title of the podcast into the search bar. You'll find the article and all the links and things we talked about today. Thanks so much for stopping by, and we'll talk to you again real soon.